I asked you whether this changing up of the calculus is actually what global investors want to see. How difficult is it to calculate what the US government's going to do next?
Well, it's very difficult indeed, because the speed at which things are coming, some news are usual, some news are unusual. So the speed at which things are coming to investors' attention is just went out of control. And some of the news do have positive implications for companies, but there is still the risk that the US government's goals are not going to be always aligned with business objectives and the company's primary goal of maximizing investor value. So the risks are building.
Risks are building. Does it put you off the generative AI tailwinds more broadly, though, that we've seen? Let's go back to previous weeks with NVIDIA and AMD becoming in the eye of the political storm and having to pay 15% if they're going to sell into China, for example.
So that's very interesting, because if you look at AMD and NVIDIA, today they are in a better place than they were a month or 2 months ago, where they weren't able to sell their chips to China. Today, all of a sudden, they can if they pay 15% cut of their Chinese sales. So this looks like it is good news, but in the short run, it's going to give these companies more revenue. But in the long run, in the medium to long run, we don't know how the news and the US government interference is going to change, whether the changes are going to be positive or negative. So that means that the volatility is higher and the risks are building up. It doesn't mean that the companies will not benefit from the US government's support, but it means that the US government will not pursue the same goals that they do all the time. So that, I think, is a risk, and that is, it is something that we become quite cautious.
Even though over the last year, let's call it 2 years, basically 7 names have made up nearly all of the equity benchmark's gains. So how does an investor basically hedge against that volatility? Do they stay exposed but start diversifying, Ipek?
Well, diversification is one of the rules that we're just like recommending, obviously, because diversifying away from the US equities that have quite high valuations right now towards sectors that do have opportunity to follow up is interesting. Then other clients are looking to buy put options, for example, that are interesting in case there is a sell-off in the market and we start seeing the valuations come down. And there are many things to do, but at the end of the day, what we see is that AI is growing. It is not the AI cake that's going to be smaller, but it is how the AI cake is going to be pieced together that's going to be important. And we think that the international companies are also going for a piece for themselves, and that is actually giving way to opportunities in the international markets now that the US technology companies are valued to perfection.
It's interesting, Ipek, you just mentioned how perhaps you use options to be able to, well, hedge oneself. What many would say is what occurred with Intel is many were using it as a hedge, betting against it to be able to protect the upside that they've been getting from NVIDIA and other areas of the chips market. Was that something that you saw at play, and where else had basically investors looked to bet against to protect other winnings that they'd seen in the sector?
Well, you don't really want to go against NVIDIA and AMD. You cannot really go against this machine. The only thing that you are willing to do is to protect any potential sell-off or any potential drawdown. So in this sense, we think that it is always very important to stay long, and just diversification of the portfolios looks like the way to go for us. We do not really expect to see a sector meltdown or very big change in the dominant position of the US. What we are trying to do is just to diversify a little bit in order to tame the downside risk for investors who are looking to have some international exposure to grow their AI play.
And is that Europe? I mean, I think of ASML, SAP, but not many other AI names leap to the forefront when it comes to publicly traded equities. Is it more of an Asia game as well? Is it thinking elsewhere in the asset pool, not just equity, but maybe debt?
No, you're right. I mean, for Europe, we are specifically looking into defense-related technology plays, and we think that the defense spending is somehow going to boost the technology spending in Europe as well. So we are mostly looking into military and defense technologies within the European context. For China, we are looking at the AI plays. We are looking at the foundries and the chip makers like SMIC, for example. Same thing for South Korea. We are watching very closely Samsung, but especially SK Hynix, So there are some champions around the world that are willing to take a piece of that cake and that are looking interesting and that have not seen enough exposure so far because they have remained mostly under the cloud of the US big technology giants. And we think that there's still opportunity there and there's still reason to think about diversifying there.